India's only daily television platform for small businesses. We bring you the right information to empower you, the SME entrepreneur. Tonight on the show, we're bringing you part 1 of a special conversation that I did with Vaidyanathan of Capital First, talking about the merger with IDFC Bank and how he's really answering concerns of some shareholders saying that valuations were very high, and his tips and advice for entrepreneurs who may be looking at the mergers and acquisitions route. Take a listen.
In 1991, India initiated the policy of economic liberalization. Indian markets were opened up for foreign investments. Import duty and taxes were reduced, and the country started running towards becoming the world's fastest growing economy. This economic growth brought higher disposable income for the aspiring middle class, propelling growth for the financial and banking sectors in India. While acquiring loans became easier for big organizations, MSMEs continued to face challenges. Capital First, a financial institution, provides debt financing to small entrepreneurs, with Vaidyanathan at the helm. Capital First has been listed on the NSE and the BSE. In the last 5 years, the market cap of the company has grown from rupees 7.81 billion to rupees 76.28 billion.
My first question to you, and I remember this was one of the first things we'd asked you when we met you last season for season 6, about the idea really, the seed of the idea that had formed when it came to really setting up a bank. That thought was always there when you were leaving ICICI as well. Just maybe you can walk us through that.
First of all, it's a great pleasure to be on Leaders of Tomorrow for a second time this year. With regard to the seed, I was on your channel maybe 2010, as well as on another channel as well. And our original opening thought was that, this is a non-banking finance company. We will build a new business model on it of financing small entrepreneurs and financing small consumers in India. And one day, hope to convert it to a bank. I have to use the word hope because you can never take a banking license in India for granted. But it was let me say, a shot we thought we could take. It just so happens that 8 years have gone by, the company's become very large, the company's got a unique positioning in a financing of small entrepreneur space. The loan book has crossed to 27,000 crores, or in fact touching 30,000 crores this quarter. So it just got the kind of scale to merge into a bank and then get a banking license, or let me say, get a banking platform through the process. Okay,
so congratulations on the nod coming in from RBI as far as the merger is concerned with IDFC. What has it been like in the last year? It's been hectic, of course, in terms of all the approvals coming in terms of the merger happening, but maybe some of the highlights of this past year?
Yes, it's been very hectic because the announcement was first made in January, and let me say 3 months leading to the announcement was also very hectic. January to now, yes, there are a number of approvals to be taken from the regulator, from RBI, from SEBI, from NSE, from BSE, from Competition Commission of India. That is one process. 2 was with regarding to understanding the two organizations along the way, got to know a number of people there and figuring out how to put the two merger together. So yes, it's been very tough, maybe 12 hours, 14 hours kind of work life, and the brain never switches off because even I wake up in the middle of the night and at 2 o'clock in the morning, I'm thinking about what next about the merger.
It's all been worth it.
It's all been worth it. It's getting very close. A critical vote is on September 3 from shareholders. Never to take it for granted.
Okay. While you're saying it's definitely been worth it, I want to take a step back and also perhaps bring in the fact that there have been some questions raised on this merger with IDFC, particularly with regards the valuation and the price that you've really paid for it. Those kind of questions are always tough to hear, but I'm sure you'd agree that perhaps it's crucial to also hear these things from shareholders who are saying, why perhaps these valuations?
I think the valuation was perhaps a fair sort of a valuation because it was put together professionally between two institutions. And I think the prevailing market prices at that point of time prevailed. I think in the end, the issue is not about so much about valuation. The issue is about what can be created together on a platform that is almost perennial in the form of a banking license.
Okay. So what are you saying to those people who are saying that perhaps you've overpriced and you've sort of overpaid really for this merger with IDFC?
But I think the way to look about it is that a banking platform is a perennial it's almost a perennial way of doing business, because the liabilities franchise, which is the deposits franchise that comes along with it, is very, very powerful in the long run. So we got to see that in that context, because the need is from both parties. From our point of view, the need is to get a banking platform so that we get liabilities forever and low-cost liabilities. From their point of view, the need was for getting a retailization of the loan book. And I think we should focus on what together we can put together, rather than just worry about valuation. I think valuation, the past story, it's happened about a year ago. I don't think there's any re-looking about that at all.
Okay, so on one hand, of course, there's valuations. There's also been some concerns in terms of the market cap. Is there anything that you want to address through this interview?
Yes. Yes, I understand. I understand that the market cap actually came down from about 8,000 crores to say about maybe down 30% since the time they announced the deal, and I'm sure you're referring to that. But again, we got to see the short run and the long run. When we look at, like I said, a banking platform, we get to do a lot more products along with this. Today, as a non-banking finance company, our main line of business is to lend. Tomorrow, liabilities, which is deposits, become a line of business. Wealth management becomes a line of business. A credit card becomes a line of business. A overdraft lines of credit becomes a line of business. So it becomes a much more comprehensive proposition with a liabilities franchise. So I always say that when we look long, a 5-year, 8-year, 10-year period, and longer from there on, a banking franchise just gives you that sense of comfort of perenniality with multiple sources of revenue. So I think, therefore, to your comment on shareholders, I definitely think that people should see it in the longer run, and I'm very sure in the long run, this will create more value than being a monoline player.
Okay. We were also talking about, the shareholders, and I want to flip that around on its head and say that, do you think it's important that listed small businesses, SMEs, MSMEs, etc., have shareholders who can ask these tough questions? Why is it crucial to have that?
No, indeed. I think every shareholder has a right to ask these questions and should ask these questions, because after all, from a shareholder's point of view, even if it's a minority shareholder, it is material value or investment from that shareholder's point of view, and we should be sensitive to that. Which is why when we wrote out this annual report for this year for our shareholders, I specifically took an effort to write to them that I understand your feelings when the share prices come down after the announcement, but I assure you that this is a platform for keeps or for the longer run. So I do think that yes, shareholders have a right and should exercise those rights.
Okay, let me look at the big picture when it comes to M&As now. The businesses and the entrepreneurs that we talk to have a turnover up to 500 crores. How crucial is it for small businesses to look at M&A? Would you say it's important for them, or to maybe consolidate in the first couple of years and then look at inorganic growth?
There should be a specific need and a purpose for M&A, because M&A by itself is probably meaningless, and how many M&As fail if they don't come with a specific purpose. In this case I described to you, there was a need from both organizations, and that became the basis of why we decided we have to make it happen. Then there's a question of, let me say, an issue of how to figure out the valuation, what are the timings, what are the approvals. You can figure out every issue, and you can deal with every issue that comes in front of you if the purpose is clear. So I think definitely, even from small entrepreneurs, medium entrepreneurs, large entrepreneurs wanting to merge or wanting to create M&A, the opportunities has to be clear and the intent should be clear.
Okay, so if you're looking at, say, a checklist of sorts or hygiene when it comes to M&A, definitely purpose, I would assume, tops that list. But anything else that you want to give our viewers through this interview to say, here's what you should keep in mind?
Well, first of all, I must say that we are going through it right now, and it's not exactly a completed deal where I can give a list of do's and not to do's. But I can safely say, apart from the 2 points we talked about, a purpose and objective and opportunity that we talked about, I think the willingness to put it together in a manner that is conducive, that is comfortable for both parties, and to sell the concept to every member of the team down the line as to why we need this and what is in it for them and what's in it for the institution in the longer run. I think to be able to sell the concept, to communicate the purpose, employees to a larger team for a greater buy-in becomes very important. That is something that I have done at this point of time to the Capital First employees in the way we write to them from time to time. We talk to a larger employee base through media where we give interviews, let me say, to a larger populace. I think that becomes very important, communication.
Okay, so how did you communicate then to your most key stakeholders, if I can call it that, which is your own employees, when you were going through this process and as you're going through this process? How are you handling that?
See, the truth is that when the deal was under discussion, it was entirely confidential and it was kept so. But once it was done, we had actually written up an employee communication ready. The moment we announced it to the exchanges, next second the button was pressed so that employees got to know. So this is the way we did it, because we felt that the employees should get to know at the earliest. The second thing we did was, in that very mail, we explained to employees why we're doing the transaction, saying that we are getting a banking license or banking platform through this process. It becomes more perennial, sources of income becomes more diversified, and so on, so that people get to see that it's a corporate action happening, all right, it's exciting, but also why it's happening.
Time for a quick break, but don't go anywhere. We'll continue bringing you highlights of that conversation I did with Vaidyanathan, talking about that merger that they've done with IDFC Bank and what it really means for their future when it comes to synergies. Do stay tuned. Welcome back with us here on Leaders of Tomorrow, continuing to bring you highlights of part one of an interview that I did with Vaidyanathan, talking about their merger with IDFC Bank and his advice for entrepreneurs watching this interview. Do take a listen. Culture is, I would say perhaps, and correct me if I'm wrong, overlooked when it comes to deals, particularly of the size that we're talking about for you. How important is culture? And what do you mean by culture? And when you're looking at integrating two different companies with two different cultures, what should one keep in mind?
See, end of the day, we got to keep the best of two institutions together, or bring the best of cultures together. There are always conflicts and they can always be dealt with. And when we say culture, we mean a way of doing things. Universally, strong, high-performing organizations have a culture of entrepreneurship. They have a culture of can-do attitude. They have a culture of people figuring out how they can solve disputes, and most importantly, view at the market and view at the opportunity, and rather than get internally focused. I mean, I would definitely like to see a very dynamic culture in the new organization, an organization with a very can-do attitude, because challenges will be everywhere. Even when this merger comes through, there will be challenges. And our job as all our employees is to figure out how are we going to deal with the challenges and create something that is just an amazing bank. I believe such an opportunity is possible. And I think it's right in front of us. Very rare people get such opportunities in their lifetimes. And I think all our employees have that opportunity.
Okay, we are talking about challenges, but I want to definitely also talk about the high point, really. And what is exciting you the most about this M&A going through? What perhaps is that one thing that you've perhaps been looking forward to when you're saying, yes, it's all coming through?
Okay, I'll put it plain from my side. Yes, a banking license. That was objective number one in 2010. We announced it publicly. Now it's 2018. We're getting it. If this merger goes through, and we believe it will go through. From the other side, yes, they thought the opportunity of getting a new leadership in place. They got an opportunity of getting a retail institution that takes years to create. I must point out to you how retail is built, because retail institutions are not built over 2 or 3 years. It's built over 8 or 10 years over, for example, if you build a 30,000 crore portfolio, it has to season over a period of time. You need to build the customer relationships, system needs to stabilize, and the technology needs to be built. So I think that we bring all of these to the table, and of course they bring an amazing platform and other businesses that they bring together.
Okay, I remember this is one of the things that I asked you when we met you last year in terms of your own fundraising. You didn't raise too much funds in the first 2 years of your existence. At any point, did you maybe question yourself to say, why am I even doing this in your initial days?
The truth is yes. when at some point of time we were neither getting the equity. I was talking maybe not just 2 timing, I was maybe 3 timing and 4 timing private equity players. I would meet somebody for lunch, I'd meet somebody for breakfast, I'd meet somebody for dinner. I would tell neither of them I met the other person. So sometimes it just became very difficult because we were just not getting equity, or getting debt in 2010, 11, 12 was very difficult because policy paralysis and interest rates going up and all that. So yeah, sometimes it felt it was getting very heavy on us. But I think the mission was very clear that someday you've got to make a large NBFC, convert it to a bank. So the mission probably kept us going. Okay,
but apart from, of course, the fact that that was something that you were looking forward to, what helped you keep going in those days? Did you at any point say that, yes, it's difficult, why am I doing this, etc., but the convincing factor to say this is why I'm doing it, what was that kept you for the long run?
See, first of all, there is no going back. When you left the large institution, you're out and looking for equity. You already left the job, so there's no option going back and saying, hey, I want the job back again. They don't exist. So there's no going back. And number 2, I didn't philosophize this so much. Basically, the way I thought was, okay, I'm into it. Now, just keep trying and looking and someone will happen, because what we were going after was a really big opportunity. What was the idea? Finance small entrepreneurs by using technology. Now, that time in 2010-11, the word FinTech it is not the big thing, but the concept was very much there.
Okay, let's talk about the big picture when it comes to the role of the government for different industries. First and foremost, given that you're going through the M&A, I want to talk about the regulatory environment. The government is talking about ease of doing business, but India doesn't rank very high when it comes to that list. Are you happy perhaps with the overall ecosystem that you've seen for your own business and in this industry?
Well, I would say that over the last many years, let me say over the last 5 years or so, there has been tectonic changes in the industry. Let me give you a few examples, and that will drive home the point. Let me say in 2010, there were 150 million credit records on the bureau. Today there are 600 million. Now Aadhaar was in its infancy. Now everybody has an Aadhaar card. The India stack did not exist. Today, India stack exists where anybody can wire money to anybody instantly. So let me say the arrival of artificial intelligence and so on did not exist today. Paytm and the wallets and so on and so forth, they didn't exist. Maybe they existed, but not at the scale they're talking about today. So the whole ecosystem has come together over the last 5 years, and I think it has given digitization a huge push. Now, our industry is not a manual industry. We do not evaluate an entrepreneur by looking at the cash flow specifically, at least for small entrepreneurs. And this digitization has helped us go down the ecosystem.
Okay, just before I come to talk about how FinTech is changing and how digitization is changing, I also want to talk about maybe some of the things you'd like to see changing when it comes to the regulatory environment here in India.
Frankly, as far as these few transactions that we put together are concerned, the regulators have been very cooperative. Sure. For example, Competition Commission of India approval came to us literally within a month of applying. Right? The Reserve Bank of India was very prompt in giving approval for the deal. So I genuinely do not have any complaints so far as this is concerned. Now, I would therefore say that if we are looking ahead in India, I would actually say that if the tax rate structures, and specifically direct tax rate structures, are more favoring small entrepreneurs, I'll be the happiest.
Okay. So then digital. Even as you're looking at that base, and as the synergy with IDFC, of course, brings you that focus on the small borrower and the small lender, how is technology really changing? 1 or 2 examples. I mean, everyone is seeing what is happening as far as FinTech is concerned. You have a lot of entrepreneurs who are innovating for this space. But as someone who's sitting there having that bird's eye view, what are the specific changes that you're seeing, that you're saying that, hey, this perhaps is what is really changing the industry?
Okay, let me give you one example. If you went to buy an item on a credit card, now what do you think the shopkeeper would normally tell you? He'd say, below a ticket size of 250 rupees, I can't accept a credit card. Haven't you heard that before? So now, have you ever heard of someone using a credit card to buy a packet of chips for 5 rupees? No. With the arrival of the Bheem, the Paytms and the mobile phones, now you're able to use a transaction and buy a chips packet of 5 rupees. This was not possible before. Suppose someone wants to give a financing to someone else for 2 months, and you want to just buy a furniture for 2 months and you want to pay back after 2 months. The traditional transaction could not be viable at all. You gave long tenor loans, maybe 1 year or 2 years or 5 years. Now, a small loan for a short tenor is possible to buy a furniture. Why? Because it's FinTech. Okay. The point therefore I'm making is that FinTech is enabling transactions which the traditional financing could not do.
Okay. But as more and more companies are entering the FinTech space and the competition is becoming more intense, is becoming more crowded, for a small entrepreneur watching this interview, perhaps what you think is going to be the big game changer, or maybe 1 or 2 trends in the FinTech space that you wish more companies would explore?
Okay, let me talk from the entrepreneur's point of view. I think that entrepreneur's point of view, clearly the data, he was used to provide his income tax return to get income, and then he was used to waiting for many days to get a loan, for example. Mm-hmm. Now, that data point of income tax is no longer the relevant data point. Just any number of data exists in terms of mobile phone usage and your water bill payment and so on, utilities bill and so on. Number 2, you don't have to wait for days, you may get it in maybe minutes. So from an entrepreneur's point of view, life has definitely changed. Now, from a financial's point of view, I would definitely say that the number of players have dramatically increased. Earlier it was banks, then it was banks and NBFCs, then it was that is traditional NBFCs, then it's banks, traditional NBFCs, new age NBFCs. Now it is banks, traditional NBFCs, new age NBFCs, FinTechs. So the ecosystem has definitely expanded a lot. Okay. I think that we should look at this not from the lender's point of view, we should look at this from the consumer's point of view, and from the consumer's point of view, I think the story has expanded a lot. Okay.
Do you see India becoming a completely cashless society like what's happening in Sweden or the US? Do you want to see that? Do you think that model perhaps is right for a country like India?
Is it a wish list? The answer is yes. When we see developed countries moving more and more cashless, do we want to see our nation get there? The answer is yes. Mm-hmm. Has significant progress been done in the last few years? The answer is yes. Mm-hmm. Sometimes people look at demonetization and say that, look, cash is back. So what's the point in having done demonetization? I don't see it like that. Cash as a percentage of the economy has definitely come down. So therefore, do I want to see that? The answer is yes.
Okay. All right, completely out of time on part 1 of this special conversation with Vaidyanathan. If you have any feedback for us, here's how you get in touch. leadersoftomorrowtimesgroup.com is our email ID. You can also get in touch with us on social media. Sunanda_J is my Twitter handle, or reach us on LOT_ET now, which is our official Twitter handle. Our Facebook page is Leaders of Tomorrow on ET now. All right, that's our show tonight, but part 2 coming up, talking about culture and the importance of hiring right with Vaidyanathan. What should one look at?
We look for people who are energetic, who are motivated, who have some contextual knowledge but don't need to be experts, but attitudinally has to be fantastic. They're in tune with the larger mission of an organization, then I think that's the kind of people to hire. I think there's a lot, it depends on the people who are seniors and who are senior management, who are entrepreneurs.